A common thing that people are searching for when they're first getting into mining is, how can my economics be the best? And I think you as an economist can answer this with a little bit more authority.
Learned so much about energy markets and about energy in general. Before mining, I wasn't aware of the infrastructure that I saw, driving on the highway. Now all of a sudden they're everywhere,
Welcome back, everybody, to Hosting Bitcoin. Today we've got Nico Smid. He's the founder of Digital Mining Solutions, the author of the Bitcoin Mining Blog Post, which is a newsletter that comes out about Bitcoin mining just about every week. Nico was originally educated as a professional economist and worked as an economist in the Dutch government, right?
Yeah, not really as an economist, but I worked a lot on international business development and export promotion, as we call it, at the Dutch Ministry of Foreign Affairs.
Beautiful. So Nico obviously brings a wealth of knowledge into the mining space that few others have. And we're super excited to have his insights on mining economics, infrastructure development. And we're just going to talk today about how the mining landscape is shifting, what kinds of opportunities are emerging. But first, would love to dive into your personal story and how you got into Bitcoin mining, and made the move over to Argentina as well.
All right. Well, thank you guys for having me. Really good to be here. We've known each other for a while, and it's really nice to have this chat and be on your channel. So thank you for the invite. Yeah. So I'm Nico Smid. I live in Argentina, in Buenos Aires. It's sunny here. We have opposite seasons to the States, so we are heading into spring, summer. But originally I'm from the Netherlands. So I grew up in the Netherlands, in the northern part of the Netherlands. Lived for a long time in Amsterdam. And have a background in economics and international development studies, and worked for the Dutch government for a long time. First, I worked on projects whereby I would help entrepreneurs from South America to set up their exports to Europe, and then later on, I worked with Dutch companies that wanted to set foot in South America, working closely with the embassies here in the region and forming consortia of companies that we would present under the umbrella of the Netherlands in the region. So international business development has been a big emphasis of my career. I got into Bitcoin in 2017, early 2017. My best friend said to me, "You need to buy Bitcoin." I looked into it. I found it too difficult to purchase. I thought, whatever. And then I looked a couple of weeks later. I was like, "Oh, number goes up very fast. So I need to pay attention." So I bought my first Bitcoin and I got dragged into the rabbit hole. So started consuming a lot of podcasts, articles, learning about Bitcoin, but learning about money, economics, like the macroeconomic environment. I think I followed the rabbit hole as many did, and ended up learning a lot of things, including trading, which I also those technical skills I apply in my newsletter when I run over the numbers. It wasn't until 2021 that I got into mining, and that I thought, here's where I can apply my skills, because I always wanted to work in Bitcoin, but I'm not a programmer, not a developer. But when I got invested in Bitcoin mining, I saw it's a young industry, fast-growing industry, still a lot of room for professionalization, a lot of room for creating new businesses and services. So I thought, okay, this is where I can apply my skills. And at the same time, me and my family, we moved to Buenos Aires, Argentina. My wife is Argentine. She lived in the Netherlands for 15 years and was fed up with the weather. And we moved down here. And here in South America, I saw a lot of opportunities for mining, a lot of cheap power, abundant power that's underutilized, stranded power. So that's what triggered my interest. I was used to do some market research before diving into opportunities from my previous job. So I did quite an elaborative market research, and then I compiled all this information. And it's only 3 years ago, but at that time there were not that many media outlets covering Bitcoin mining. So I thought, okay, I'm going to pour all this information into a newsletter. It helps me to position myself in the industry, and it forces me to keep on learning, right? Like if you write about things, you you have to understand it. So it's forcing me to learn about Bitcoin mining, and it's been 140 newsletters now. I haven't missed a week, and yeah, that newsletter has been a lead generator for me to provide other services. So digital mining solutions offers three types of services. One is focusing on marketing solutions, so helping miners setting up the marketing strategy and providing content to get their marketing machine running. And then we do brokerage services, so we matchmake investors with operators and builders of greenfield sites. And we sell rack space on behalf of miners that have their facility ready, but maybe not haven't spent that much time or effort to put their name out there. We leverage our brand to fill their space. And then we provide consultancy services, so advise startups about their business plans and how to improve the pitch decks, and help miners that are already established to scale. So that's it in a nutshell. But it's been quite a journey. I think mining is very cyclical, so the emphasis within the business is also moving with the market, let's say. And
Well, you've definitely, I would say, become quite a force in the industry between the newsletter and digital mining solutions. I mean, we work with a few of the same people, a few of the same clients. But I personally read your newsletter every time it comes out, and I know that there's thousands more who do the same. Just so that we can, I think the purpose of this, we want to make it as valuable as we can for people who are kind of on the fence about getting into mining. A lot of people get scared by this industry because there's so many numbers, so many variables, and I think you bring a unique light to that. And Joe and I, one of our missions is to make this as accessible as it can be, and I think you've
Mhm.
got some of the best insight in how this can be made in terms of what kind of decisions investors make when they're getting into this space, how they can be successful, and maybe even what people do wrong. If you want to talk a little bit about that.
Yeah, well, I think it's also learning by doing, right? Like you can read all about it, but once you buy your first ASIC, then you automatically get pulled into it and you start learning. That's at least my experience, and that's what I see with many miners. So yeah, not being scared to start is, I think, is a first step. But also, like most clients I work with, I always advise to start small and then scale. Right, whether you're working with a new operator or whether you want to build out a site, start building out a 1 megawatt, 2 megawatt, and then once you see all the hiccups you run into and all the challenges you run into, then and improve, yeah, improve that and then scale instead of going all in at once. There's much to learn. There's many aspects. So, but getting started is a first. I think
100%.
not. Yeah,
Yeah, I mean
now is a very
that was one
yeah.
of the biggest
Go ahead.
things I had as a issue when I first started the process of looking into mining. It was, I guess, analysis or paralysis by analysis. I would go through and run all the spreadsheet numbers and look into this, and the best advice I got was actually through one of our shared mentors, and it was just do it. Just get in there and get a little piece of it, whether it's one mine or whether it's one small site. Just get in there. You're going to make mistakes. There's going to be issues. You'll figure that out and you can move on to the next bigger thing. And to me, that was the best advice I ever got, because I finally just kind of got off the pot and started diving into it, started going to conferences. In fact, Nico, we actually met at the same conference I met Bo at, because we were part of that same mentoring club at the beginning. And I
Yeah.
met you, I think it was in person in 22, in October at a mining conference. And
Yeah.
that was a turning point for me. Hearing your story, meeting Bo and hearing what he was doing for his plans, and like, gosh, I could do this. And that was really a cool part of it.
Yeah, I also think like in the beginning, obviously there were a lot of technical people, so people that knew how to work with the ASICs. But slowly by little, you see more people with different big backgrounds coming into the industry, which I think is a positive. And I mean, I've been working in mining now for over 3 years, but I never deployed an ASIC. So you don't need to know everything in order to get started. There's a lot of people that are very good at their job, and I like everybody to work on that piece that they're good at and yeah, focus on what I'm good at. So I also think that's also a crucial part to accept that you won't be knowing everything and you won't be learning everything. You can obviously see and look over the shoulder of somebody, but you won't be able to learn everything because it's so many aspects that are involved in mining.
So obviously you can't figure out everything, and that's actually hilarious to me that you've been now working for 3 years and haven't deployed a single ASIC. I didn't know that about you, but it just speaks to what people get locked up with, which is
Yeah.
thinking that they need to know everything before they make a move. And the reality is you've got to learn by doing in most cases. What are some of the things that you see set the most successful either operators or clients apart from people who either flame out or underperform, decide that mining is too competitive? What sets apart the people who are outperforming Bitcoin, let's say?
Well, I think buying ASICs at the right moment, I think, is crucial. Like now, ASICs are relatively cheap. They've hit historical low prices this year. I got into Bitcoin mining towards the end of 2021 when machines were very expensive, and I never was able to recoup that investment. So, being able to time the market and having that patience also. I've like the most successful miners I've met are very patient. Like even when everybody is hyped, like they were able to say, no, this opportunity is not for me. Like I'll wait for the next one. Maybe I miss it. Maybe I don't. But having that patience and zooming out, I think is it's really really important. Especially with like now, price has been quite exciting. When price starts outpacing hash rate, then the profit goes up, and many people want to go into the industry. I think that's really a time to pay attention. Like, are you paying the right prices for the machines, or are you paying the right price for your electricity? Are people overcharging or overpromising? That's what we saw a lot in the previous bull run. Also, people that said that they had capacity or rack space available, but they didn't, and there were a lot of people that had delays. So, I think that's important. Looking at price, but also at where you invest, how reliable is it?
What do you think is usually misunderstood by people getting into mining? I mean, you have the unique position of educating both new miners and really experienced miners. What do you think is what people consistently mess up when they're either making decisions for how to allocate or just getting into the space in general?
Yeah, so mining is a long-term game, but still, like the daily price action has such an influence on whether people are pulling the trigger or not. So, trying to zoom out is really really important. Yeah, I think that's the biggest one, and then that patience is really important because every day you're not mining, you feel like you're losing out, right? So I think that's
I I see a lot of people that come in, they see all the new units coming out, the newest and most efficient miner that comes out, whatever it may be of the day. Right now it's like the S21 XP or the, long
yeah.
string of letters and characters that I don't even know from Bitmain. Um, and one of the common things that we get is people coming in saying, "Well, is my equipment just going to be, invalidated or obsolete in a very short time?" It seems like a new miner comes out all the time, but you've got a unique perspective into kind of the depth of how many different kinds of machines are on the network at any time. What would you say to people that say, "Oh, I shouldn't get a machine now because there's just going to be a new one coming out that's more efficient in 2 months"?
Well, I would say sometimes it even makes sense to buy an older machine. Like there's a lot of older units that are very cheap, and you might have a faster ROI, even though the efficiency is less. And I think it's important not to jump on the hype train because there's a new model coming out every time, and I think we've saw that with the S19 XP a lot. Like many jumped on that hype train because it was the latest and the greatest, but there were big delays in production, and when they hit the market conditions looked very differently. I think if you look at the latest machines, like the efficiency has dropped quite a bit over the last few years. I mean, 5 years ago we had machines that were running at 100 joules per terahash, and this year we had the first sub 20 joules per terahash units coming out. That the speed of improvements in efficiency is slowing down, which has to do with the chip size, right? So the first miner that was produced by Bitmain, the N miner S1, was produced with 55 nanometer chips, and right now they're producing machines with 3 nanometer chips. And the smaller these chips become, the higher the failure rate. So there's the chip size reduction is reaching its limit. So the speed of efficiency improvements is slowing down. Most of the efficiency improvements in the near future I expect to come from different types of cooling, like hydro cooling or immersion cooling, more on the like an efficiency gain on the operational side than on the ASIC level side. Um, so I think if you now buy like these sub 20 joules per terahash machines, they will last longer than maybe a few generations back, where that curve of improvement was still way steeper than it is now. And you asked about machines on the network. It's been a while since I checked it, but I think like last time I checked it, like the S21 series was around 2.5-3% of the network. So it's also like you get over flooded by this information about new machines, and everybody's talking about the new machines. Like all the big miners, they do these machine orders, but then the reality is these machines need to be produced. It takes time to produce, to deploy. So it's not that if a machine comes out with a new machine comes out, that tomorrow the efficiency of the whole network drops. It takes time, to have its impact on the network. And the S19 XPs are a good example of that. They are now, I believe, around 18%, 18% of the network, and they were launched. In 21, came to market early 2022 or June 2022. So it took various years to capture this percentage of the network hash rate, let's say.
That's crazy. So the S21, for people that don't realize, that's been out almost a full year at this point. That was an early 2024 launch, and it's still only 2.5% of the network. And
Yeah.
I mean, in our facilities, that's most of the people in our facilities, but still, it's such a tiny dent on the overall efficiency of the network. Who knows how long it's going to take?
Yeah,
for
so
like
it's a lot of new people that are new machines that are being deployed, and that's the machines you see like, and that's being talked about. So you're sometimes you're a
like
bit
a recency bias.
yeah, somehow, yeah. Yeah.
One of the things that I was curious about is the global efficiency. Do you have any kind of insights on what the average that we just talked about, how the S21s and the newest efficiency models that are in the sub 20s are just a small part of the network? Did you have a ballpark idea of where the global efficiency is running at?
The global, like the overall average efficiency is currently around 28 joules per terahash.
Wow.
Coinmetrics has a good website where you can track that. So yeah, so that's the average overall network. I think also like the S21s, I think the biggest concentration of those, like the newest generation machines, is in the States, right? Next to maybe China, where they test these machines. Like, yeah, I think the most capital in this market is in the States, and that's where new machines flow to. Um, but yeah, I see in South America, for example, also that more and more operators are looking for latest generation machines. Like before, yeah, South America, especially Venezuela and Paraguay, were known as like the final destination for ASICs. I think, of course, still these machines find their way to these types of markets, but as hash rate has been growing globally, I think also you see, that these markets are catching up in technology in comparison to the States, let's say. So where before there will be a huge gap between generations that were deployed over the globe. Now, you see hydro cooling deployments in South America, and you see these more modern machines going to these markets. I think most of the older generation machine will eventually end up at those sites where there's more unreliable power or more downtime, let's say, and it makes most sense to put the machines with the highest efficiency for which you pay the biggest premium, so the highest dollar per terahash price. To put those at places where uptime is highest, and when uptime is lower, that's where probably these less efficient machines will go.
So you mentioned that the network's at like 28 joules per terahash. The most efficient miners right now that we're selling are 13 joules per terahash, so more than twice as efficient. But there's still a place for less efficient machines on the network to make people money. And you already mentioned that you may not even want to buy the most efficient machine. It might be not the most effective way to deploy your capital. And you started to touch on it, but how do you advise people that are thinking about deploying in, say, North America versus South America? What kinds of considerations do you usually bring up for people, and how they adjust their strategy based on where they want to deploy? Do you have like a barbell strategy where you tell people, hey, send some things up to North America and I've got someone down here for you? Do you keep some people just focused on more stable jurisdictions, or how do you think about that for your
Yeah,
clients?
like in general, the clients that I work with here, especially bigger clients, they have operations in the States already. They diversify into more riskier markets. That's something I would advise not to start in Ethiopia or Paraguay or Argentina, but to diversify into and have a footprint in another jurisdiction. Just in case. And also, if you mine in South America, you have the seasons that are opposite, so
Mm.
that can be a strategy as well. But if you're starting, I would say go to the safest place, most stable place there is, and currently that's the US. Uh, because there's many challenges that come with mining. So if you're starting out, I would say the having a stable jurisdiction is a good one. And also, I think the US has the benefit of having a huge secondary market, right? So it's easier to sell your machines, to get machines, right? So I asked for a quotation the other day here for S19J Pro, so here in Argentina, for a client, and they're almost twice as expensive as in the US, and that has to do with the importation tariffs that you have here. So
Wow.
keep it in mind that the ASIC market is huge in the States, and that's not necessarily the case in South America or other exotic markets, let's say.
So that's I mean, a common thing that people are searching for when they're first getting into mining is, how can my economics be the best? And I think you as an economist can answer this with a little bit more authority. People fall in love with their spreadsheets, right? They're like, well, how can I justify paying 8 cents when I can get 4 or 5 in, Argentina or
Yeah,
Ethiopia? I'd love to hear your take on the dangers of going for just the lowest power price that you can go for.
yeah, reliability is so underestimated. Like you can get cheap prices, but I've witnessed it myself. Like cheap prices, but then very poor uptime, and then you can have a very nice spreadsheet, but it goes out of the window. So I think next to of course you need to look at prices, and it's important. But I think obtaining data about uptime, like if you are putting your machines at a third party operator, like just ask records that show what their uptime is very valuable. Uh, and also, I think one of the challenges, at least that we see here in South America, is also customs, right? You have to have really close relationship with customs. If you don't, then your machines can end up being seized, and you have to deal with customs here, which might be turn out to be a costly thing, right? If they hold on to your miners. So yeah. Um, I think those are two important ones.
You've mentioned before a bit of your story, and I mean, Joe, I'd love to hear yours as well. That mining is so important based on when you get in and timing, and it's part
Yeah,
of why when we're deploying clients, like we keep it under 2 weeks. If we have a machine plugged in, we're getting people hashing like the next day. But I know everybody on this call has had a 6 month or longer deployment delay
yeah,
at some point in their career. Maybe that's worth bringing up for just a couple minutes to
It,
talk to
it's
people.
crazy how the expectations of what a person who's never done this before are set by certain companies, and they just didn't seem to deliver back then, and even now. But yeah, when I first got in, I started with a single ASIC, and it was delivered to my house, and I ran it in my garage, and that was all fun, and learned about the process. I had a 99.5% uptime. I figured, all right, this is easy. Anyone could do this. But I didn't have the infrastructure at my house to be able to run more than one or two miners. So I went to the largest group that was out there at the time, the most reputable group, and ordered 6 of them. And I did that, and I would have said, oh, I guess it was June of 2021, and they told me 1 month uptime, or 1 month it would take to get online. I'm like, all right, that's not that bad. Weird thing in this industry, you basically have to pay them up front for all that, and so then you're waiting, giving them essentially a 1 month loan. Um, it turned out to be 6 months and 3 different facilities. They moved and went from Georgia to Oklahoma to Texas. And then finally, we were going to get online, they said, in December of 2021, height of the bull market. All right, just get online. And then there was a shift, and they said, okay, well, Texas isn't going to come online for another few months, but we're going to give you the option to go to Russia. But the upside is we'll knock a penny off your price you're paying per kilowatt hour, and it's going to make you so much more money. At that point, I'm like, I don't. It's been 6 months. I've given them $60,000. I'm like, I want to get out of this. How do I do that? And ironically, a lot of other people were feeling the same way. We were at the height of the bull market, and this group launched an online marketplace. And it was probably the best thing that could ever have happened to me, because I bought my ASICs, reserved them at $5,000 or $6,000 a piece. And when this marketplace came online, again at the heat of the bull market, they were going for $12,000 to $14,000 a piece, and they were being sold in like a day when you listed them on this online marketplace. Since mine were new, because they had never been run before, and they were going to get online supposedly in the next 30 days, they went for a premium. So I put all 6 of them up there, and they sold within 2 or 3 days. And I got my money from this group, and I went on to do other things. But I followed those ASICs and where they ended up in Russia. And in late January, February 22, they ended up getting seized by the Russian government. And I think they maybe hashed for about a month. Now, I feel really horrible for the people that bought those for $12,000 to $14,000 a piece, but it also goes to show, just like your asset of Bitcoin, third party, if you're going to have to do that as part of mining because you can't do it all yourself, it really comes down to who you trust, because that particular group had a great reputation and they were really the only game in town at the time, but it just wasn't operated correctly, and I could have lost a lot of money there. Now, luckily, I ended up okay, but I think a lot of other people on our team, including you, Bo, didn't have that great experience. Lucky experience, I will say.
You got off better than I did. Like,
Okay.
I ended up holding on to the machines, and then eventually shipping them to Paraguay, but they couldn't find my machines in the facility, and it took months for them to arrive to Miami. Lost a miner on the way. Luckily, they replaced it with a new one, but yeah, it was horrible. Yeah. But I think like also a lot happened, right? Like in 2021, there were not many hosting services. A lot of hosting services started building in the bear market. I think like now we're at a different place. Also, I see that retailers learn more, and where before like having a machine that's already online and hashing was really a no-go, because you didn't know what happened to that machine. And now many people are willing to pay premium for their machine to be online within 24 hours. So I think, having that guarantee to be on a rack on a short term is something that's become more important, and that people are realizing now, and many operators cannot go around anymore.
It's
I
funny you
mean, you
mentioned that
could.
because that has been a shift. I know when I first got into it, there was a stigma of having a machine that was already running and just taking it over, but it really gets rid of a lot of the uncertainty. Like in ordering ASICs myself over the past couple of years, there's a lot of DOAs. Just they arrived dead. I had a
Yeah.
couple with chips literally rattling in the box that had broken off heat sinks just in there. And I'm like, I haven't even untaped it yet. I know it's broken. And that uncertainty kind of goes away. And so having ones that are already racked and you know that they are arrived, they're not waiting for the delay of 2 3 weeks, not waiting for this uncertainty of will there be a space available after I buy it, because that's another pitfall. You buy a machine, you better be sure you know where it's going to be running. Otherwise, you could be sitting on it for months trying to find available shelf space. So I think it's a new strategy people are looking at, that, hey, it's tested. If something's going to break, even if it isn't a dead on arrival, it's going to happen within the first couple of weeks, anyways, or first month. And if you've got a machine that's been running for a month or two, these things are going to troop along probably for a very long time. Versus one, you plug it in for the first time, you're just crossing your fingers that the manufacturing process kind of leaned your way as far as that luck. So yeah, that definitely has been a shift I've seen.
Nico, you could probably add more color to this, but I remember you saying when you did an educational workshop with us and our team that a majority of the profits that you get in mining are made in about a quarter of the full 4 year cycle. So within a year's time frame. So if you're missing out, let's say you're like Joe or myself, or I know you also had a 6 month delay in deployment, and you miss that critical period. Doesn't matter if you bought your ASICs at the right price. It doesn't matter if you decided to make the decision to get in at the right time. If you have a delay in deployment, that can essentially make it where you don't ever break even if you didn't buy at the right price and didn't get it set up with the right operator.
Yeah.
But what are some of the numbers behind that to kind of add a little bit of color?
Yeah, So the numbers behind it's gonna be depending on Bitcoin price, of course. But I think this year we had a halving year, and hash price. So the revenue per computing power unit, we use petahash, which is 1,000 terahash per day. So the hash price dropped significantly because of the halving this year. Because hash price is influenced by block subsidy, by transaction fees, by difficulty, and then Bitcoin price. So it dropped, and even went to historic lows of $38 per petahash per day. And right now you see that Bitcoin price is running quickly. It's running up fast, and then you see the hash price improving also. Right now we're at 56 dollars per petahash per day, which is 50% from their lows, but it's still quite low because last year we spent most of the time between 60 and 90 dollars per petahash per day, and right before the halving it was around 100. If we want to go to $100 per petahash per day, right now at current difficulty, Bitcoin needs to be around $155,000. So we need quite a run up still to have improved margins. But it's this later stage of the bull market when price starts outrunning the amount of hash rate that can be deployed, when profitability increases. So therefore, this year has been a good year to get online and to acquire miners at a cheap price. They start to move right now. Like I see miners slowly moving up in price. but it's still early. So the the chance or the time is if you want to start mining is now, and that way you can benefit from the bull market that we all expect is coming, and acquire these miners still for a good price.
As a few weeks ago, we had Jeff Booth on, and he described this as the ultimate counter-cyclical industry. That it's so important that you get in at the right time, and that it goes against what seems to make sense on paper so often. Would you tell people? We have people coming in, and sometimes they look at the numbers, like right now or the last few months. Right now, it's getting a little bit better, but over the last few months, they would look at the numbers and see, oh my God, it's going to take me, 3, 4, maybe 5 years to get a return on this. And we always try to say, like, that's the time that you should be allocating, because all the equipment is cheap, the economics are depressed, and as soon as it, pops off, all of those numbers shift seemingly overnight. And you can easily break even on what you spent in capital within a year, versus at the height of the bull market when, profitability is crazy. People are just looking for any available rack space. They'll pay 50% premiums on hosting and still, quote, break even in 3 or 4 months.
Yeah.
That conversely is probably the worst time that you could possibly buy, even though the numbers are telling you buy, buy, buy. How do you coach people to think about when they get in the cycle with that being the backdrop?
I always talk about scaling and growing, right? Like not going all in at once and not going all out at once, because I think if you, yeah, there's also a high opportunity to sell your ASICs at the height of the bull market. Like Joe said that he got out quite nicely. So you're like, if you sell, if you buy machines now and you sell them in let's say a year, then maybe you make a profit on those machines even though they're a year old. Um, but yeah, I am a fan of scaling in, scaling out, same as I do with Bitcoin, buying Bitcoin, selling Bitcoin. Like I'm not a fan of pulling the trigger at once. Let's say maybe that's also my character, but I think yeah, people always want to time the bottom and time the top, which is kind of impossible. So in order to get near that bottom or near the top, I think scaling is the way to go. So deploy in batches.
I did have a question along this timing topic, but more on an infrastructure side of it. There's this phrase that says build in a bear. And so when you're going out and
Yeah.
building Bitcoin mines to go through and host or to do self mining, a lot of people build during the bear market. And that's been a trend that we've seen before because infrastructure is lower, transformers are easier to come across, same with switchgear and metering boxes. But I had a question. There's been a fundamental shift that we've seen over the past year of this move towards HPC and AI. And my question is this: because that didn't exist in the previous cycles, do you think there's going to be a situation, or a situation that has occurred, where because some of these other groups have pivoted towards HPC and AI for their build outs during this last bear market, that there might be less availability for Bitcoin rack space because they decided, hey, it might be better based on the numbers to build HPC, and there wasn't as much focus on Bitcoin infrastructure build outs?
Yeah, I mean, there's definitely a competition from these AI HPC data centers, but these data centers, they need high quality infrastructure, right? So they need reliable power and fiber optics. So I think miners will be driven to those places where maybe the grid is less reliable, like in countries in South America, or where power is available but in a remote place where there's less other infrastructure like fiber optics. So yeah, I don't think it will slow down necessarily the growth of Bitcoin mining. I think it will drive Bitcoin mining to other geographies and also within the states to other types of power. Right, like there's a lot of flared gas, for example, that's being used for Bitcoin mining. That trend will continue, I guess. And then you have off-grid sites or part of the grid that need load balancing. That's also something where miners can step in, where HPC can't. So I think overall, I think it's kind of a positive thing for Bitcoin mining, because the big boys, they will move to AI, high performance compute, because it's capital intensive, so it's not for everybody. Uh, that leaves less room for these mega mines, right? Like the riots, or and that will mean that other sites will be smaller, let's say, more distributed. So I think for the overall network, it can be even a positive. So.
That's good to hear. Thank you.
So we're now on the point where we're making new all-time highs every day. I mean, I haven't checked the price this morning, but somewhere around 90K, a little bit less than 90K was the last that I saw. Probably by the time this airs, we'll be over 100, and by the time someone sees this in early
No
2025,
breather, like we go straight to the moon.
it's just, I mean, there's no resistance, right?
Yeah.
But some people see that, and depending on who you are, you might think either, oh my God, crazy FOMO, like I need to get in right now. And other people might think I'm too late. It's too late for me to get into mining. It's too late for me to buy. What do you say to people like that see us hitting all time highs every day and think, I missed the boat. I'm done. I shouldn't get into mining.
Yeah, I think that like we're still early in the bull market, so there's still opportunity to get into mining. It's not too late yet. But it's difficult. There's a lot of noise, I find. Like if I look at my Twitter feed, like it's all about price. So it's gonna be like it needs more. You need to see through the forest, let's say, to get the right information and be able to make the right decision. Um, but I don't think it's too late yet. Like there's still opportunity.
Yeah, I've been through a few cycles now, and it just, like Sailor says, I'm going to buy the top forever. I bought 90K last night just for a little bit, just to see what it felt like. So
Yeah.
just because, and no, it's just one of those things. It's a different. It's different than traditional investing, whether you're buying the asset itself or going into mining. Timing is super important for mining. Buying the asset itself at all-time highs, I'm for it. Just buy and don't sell, But again, I'm a horrible investor from that standpoint. I used to trade Bitcoin when I first got into it, and that was probably the darkest point of my Bitcoin journey, was the feeling of try to trade $200 movements. And that's
Hmm.
one of the reasons I got into mining, to be honest, because I've got these little ASICs out there working 24/7, working hard for me, dollar cost averaging every single day. And like Bo said, he hasn't checked the price this morning. I haven't even looked at it. It doesn't matter really, because these guys are out there doing that work for us. They're mining if it's 75,000, if it's 150,000, they're just doing their job. And it took all the stress out of trying to make sure, did I get in on a dip? Well, my guys every 10 minutes they're going through and accumulating Bitcoin for me. I got the dip. Mining at all time high. Yep, I'm having doing that too. So mining allows me to take the emotionality out of dollar cost averaging from an investing standpoint, and knowing I don't have to pay attention to price. I know I'm accumulating the best asset in the world every single day.
Yeah, I understand. I do like selling every once in a while. Like otherwise, it's just a number on the screen, Like, and I think when you're mining, it's also you need to have an open mind. I think to have a dynamic approach to what you do with your Bitcoin, I think is or can be very favorable. Like when Bitcoin is very undervalued, it might be better to pay your electricity bill with fiat. But then when price gets overheated, maybe it's good to sell a bit of Bitcoin to pay your operational costs. Or when the market gets really heated, sell some of your Bitcoin to save up in fiat for when the market drops, and maybe there's an opportunity to scoop up some miners for cheap or infrastructure. So being dynamic in your treasury management strategy, I think, can benefit you in your overall mining strategy.
As a
But yeah,
company,
I think
I wholeheartedly believe that. As an individual, eh, I've missed too many
yeah.
run-ups selling. I don't enjoy the feeling.
I mean, it's ultimately a cash flow business, right? And anybody who's listened to other episodes knows, like, this is my whole world at this point, is Bitcoin and mining. I sold out of a long-term real estate portfolio to go fully into this. And the one thing that was missing from just allocating straight to Bitcoin was cash flow and the optionality that comes from having an income stream that, whether you want to hold it forever and never sell your Bitcoin, or like Nico said, you got to, take some off the table every now and then, go improve your life. You have the flexibility to do that. It's much, much more challenging psychologically if you don't have a stream of income coming in to make
Yeah.
that choice in a very unbiased way. And going off of that, I'm curious, Nico, how you see mining for investors who might be currently, let's say, real estate investors and are thinking, could this be a fit for me long term? Could this replace my real estate portfolio? Do you think it's going to get too competitive, or is this going to become kind of like the property portfolio of the digital age?
That's a hard question. Like it totally depends, right, on your real estate portfolio, on what your ambition is mining wise. I like real estate as well. Like I personally wouldn't sell all my real estate to go all into mining, but that's me personally. So I think it depends answer. So. But I certainly think there's a lot of people from the real estate world that understand how mining works, and that they can compare it to their apartments that they rent out, and the slots that they are renting, or when they have their own operations that they rent out. Like there's a lot of similarities there. Um, so yeah, I think it's an interesting target group to sell services to. That for sure.
The joke inside the company for us is that we are a micro condo timeshare.
Uh-huh.
It does land well. There are so many different parallels to that aspect of it. But for someone who is an investor in real estate, making a shift, or at least supplementing or dipping their toe in, is kind of cool, because there are a lot of headaches. I've had several rentals. I've dealt with tenants. I've dealt in all kinds of things of having to go out and deal with maintenance and late payments and all these things. And all those headaches kind of disappear when you're going through and making that investment into Bitcoin mining. And that's why I think it really is a good supplement. Maybe not a full replacement like Bo, but going through, and that next house you're going to buy for an investment property, maybe going through and buying, 50 miners and seeing how that aspect works versus trying it to your next house in your portfolio, just to kind of give a little bit of a hedge on that aspect of it. It's kind of cool.
The caveat to that being with the right partner, because if you don't have a good property manager, your rental portfolio is not passive. If you don't have a good host, your mining operation is not passive
Mm-hmm.
There
either.
you go.
So important to pick the right team to actually operate your quote passive asset.
And that air quotes are the biggest air quotes in the world, because like I said, I started off home mining and it was fun with one. But when you start working at scale, when you actually want to make it a true investment and get an ROI that makes sense to save for your future, these things are finicky a little bit. They're not any different than a tenant who has an issue with their air conditioning breaking or something of that nature. There are constant things that need to be done, and having a provider that can actually address those oftentimes before you even notice there's an issue, that's really important in this game, because downtime is the worst. Just like missing rent payments is horrible for your rental operation, being down a week or 2 weeks and not getting that Bitcoin mined, that's could really change your entire um, cash flow analysis for the entire year by just missing a few weeks. So it's important to have a provider you trust. You're right, Bo.
It's also about just valuing your time too, right? I mean, we have a client, very high net worth individual, who both has hundreds of machines in our facility, but also has his own facility. And the facility that he has locally to him is just a nightmare. It's something that he finds himself having to manage all the time. Like, this is a guy that doesn't need a job, and if he just chose to fully offload it to a host, it would be a no extra time income stream for him. But, what he's got with us, yeah, it really is passive. But the facility that he manages, I mean, he's changing out fans, he's resetting rigs, he's doing heat management. He's not in as good a climate, so there's, weeks or months of the year where he just can't operate, and it becomes a full-time job that makes less money. So, I mean, nuance is really important in this. Nico, you talked about uptime concerns in some facilities in South America. If you aren't running 100% of the year or close to 100% of the year, your economics really severely change. And I don't think people understand that. They go for whatever the lowest cost is, not realizing that you might be tripping over dollars to save pennies, literally saving pennies in our industry, since we do it by cents per kilowatt hour.
It's such a huge impact. Like, even location, you touched on a little bit with our particular client, but when I was going to go set up my mining operation, one of the main places I was looking at was Texas. It's the Bitcoin mining capital of the world, right? Why wouldn't you set up in Texas? Well, from a co-location standpoint, I don't think I'd ever want to send my miners to Texas. It's hot, it's dirty. There's a lot of really massive curtailment things out there. There's weather events that are crazy. Downtime is really tough out there. And when you do get your miners back, let's say after a year contract, if you want to have them back or whatever, these things have been beat up. I mean, it's a rough environment to work at. And that's why power's cheap out there. Abundant Mines has kind of chosen to work in the Pacific Northwest, and we kind of have the opposite side of it. We have very mild weather. We don't really have a lot of heat events or cold events, and the machines themselves kind of live in a happy space there, where they have potentially longer longevity, because they're not subject to these power cycles constantly, and cold events and heat events that you see in the mining capital of the world. I mean, I think that's one of the reasons you wanted to locate it here, right, Bo?
100%. And I actually love Nico's point about getting some machines in the northern hemisphere and some in the southern hemisphere, because you will actually see profitability get way higher in the summer months in Texas, because so many people are curtailing. And I didn't even think about people being in South America and, essentially having the other side of your barbell strategy that might be kind of like your little call option portfolio. Not as expensive machines, maybe a little bit cheaper power, a little bit higher risk. But in those periods where the network difficulty goes down and your economics go up, you've actually got this little piece of your portfolio that's going to outperform and run with less power consumption, be happier. Is that how you manage it with some of your clients, Nico?
Well, yeah, that's I have clients that have that approach. Yeah, but I think like the climate that you touched upon, Joe, is so important. That fluctuation in temperatures have a big impact on the hash boards, right? So yeah, if you have an environment where there's less fluctuation, less extremes, both cold and hot, then your machines will live longer. You have less repairs. And that's also why people sometimes prefer immersion or hydro cooling, because the cooling is more consistent, which means yeah, that your hashboards last longer and have better performance.
Have you got to physically work in an immersion facility, or to actually touch the fluid or a machine afterwards, Nico?
Yeah, so the first project actually where I was involved in was immersion cooling, and it can be very slippery.
Yep.
Especially like we deployed a tank which was new and which was being tested, and here in South America they call it, or in Spanish it's like the tubes, they start sweating. So because of the temperatures they move and you need to readjust. So yeah, you have. I wouldn't call it leakages, but fluids dripping, and also you still need quite some cooling in the summer. Like these tanks also radiate a lot of heat, so it's not that if you have immersion cooling that's it. Like the ambient temperature can get quite hot because of these tanks that radiate this this heat.
Yeah, it's quite the endeavor to go through and build out a setup that's immersion based.
It's best
No,
to
go
work
for it.
with trialed systems because there's a lot of failure points. Let's say that points of potential failure.
What do you think are some of the biggest opportunities that miners have over, let's say, the next 6 to 12 months that people might not be aware of? What can people look at and say, I should probably act on that?
Yeah, I would say also think of maybe an exit strategy, like sell part of your fleet, not everything. There you have the scaling again, like getting if machine prices are really increasing. Think of selling a part of your machine so you recoup a big part of your investment, and then let the rest ride and have less worries about your ROI. Let's say that might be an opportunity. I also think what I've been seeing is more and more services around hash power that's being sold. So whether it's marketplaces where they sell hash rate or tokenization of hash rates. I think in the coming period, and that might be even the next wave of opportunities for retailers. It's like I don't want to call it cloud mining because it has like this bad image, but cloud mining like tools that allows investors to get in uh, and maybe pay a premium, but don't have that upfront cost of the machines and being able to exit easy. So I think in the coming year we'll see more developments on that aspect. Um, and it doesn't mean that if you do one that it excludes the other. So you can also choose to buy some ASICs and then rent some hash power while profitability is really high. Think of a combined strategy. So I think there's opportunities there in the coming year.
Yeah, I spoke to a gentleman back in March who was raising in the middle of a raise to go through and basically start a tokenization, hash power exchange where they're
Mm-hmm.
real machines. So he'd actually be buying the ASICs and be able to tokenize their actual terahash and create kind of a marketplace for that process. And he never got his raise, but he's still really pushing for that whole process. So it's kind of cool to hear you mention that that's more of a theme that you might potentially see here in this next cycle.
Yeah, and then I think like right now those S19 J Pros, that generation 30 joules per terahash generation. Let's say they are very, really dirt cheap. Uh, I believe there will come a time when all the latest generations are sold out, and even the future orders are sold out. That these prices will rise again. So if you have old machines laying around that you didn't sell yet, hold on to them. Maybe in the
I'm looking at a
in the
bunch of them up
coming
there.
yeah. So maybe in the coming half year to a year, there's opportunities to exit these older machines and then see if you can upgrade your fleet.
And that's not just speculation. We saw this before, right, with the S9s in the previous cycle, Nico?
Yeah. Yeah, that we were even giving away for free these S9s, so you'd have to pay for shipping, and that's it.
Yeah. And they ran up
And
to
they
what?
and they
Almost $500 at the peak of
yeah
2021. So
yeah
you're talking, well, infinite ROI almost at that point. But I can see the same
yeah
things, you're right, happening with those S19J Pros. They're a tank of a machine. They're well built. And we get to the hash price where it's right and we get a shortage of ASICs. I could see them easily going through and coming up in price.
Yeah,
yeah.
for
They've
people that
the demand has already picked up for these machines. I've heard from from a well-known distributor. So
Well,
just as a reference point for people, it's maybe a couple $100 to get an S19 right now. They used to sell new in 2020 for $2,000. I wouldn't be surprised if we get another period where they're 2,000 plus again.
I sure hope so. I got about 5 or 6 of them I paid $1,000 for, thinking I got a deal. I did not get a deal. Because that's a very important thing. If you're going to buy ASICs, have a spot to plug them in. They're making you no money sitting on the ground. You're crossing your fingers at appreciation. But I bought them thinking I'd have a place to plug them in. And a year later, I still didn't. And at that point, they almost don't make sense to run right now, given the power rates. or wherever you're at. But I don't know. They're going to have a new life here soon in the next cycle. I have a feeling.
Yeah. But the infrastructure is definitely going to be a bottleneck, I believe, because build outs just take time, right? So it can take between 3 months and 18 months, depending on the permits and
Mm-hmm.
the inputs that you need. So yeah, I do think at a certain point there will be more demand than there's rack space, and it is indeed important to not just buy ASICs but have a guaranteed spot to plug them in.
It's something that happens seemingly every cycle, and people, even if you get the timing right on buying your machine and economics, you still got runway for your economics to make sense. I mean, this happened to me when I was first getting in. There was just no rack space available. I got decent machines at a time that if they had been plugged in the next week, would have made really good money and it would have been a happy story. Instead, it was more like the hero's origin story where they face some kind of challenge. Uh, and it scars them in a positive way to go change the world. But it's so important for people to have a place where they're plugging these things in, even if the economics make sense. There may not be a slot for you somewhere in the world.
That's why I really like that we do buy and host, because it really solves all that in one go. We could just sell ASICs all day long, but again, we're doing our clients a disservice. So we don't sell an ASIC unless we have a place to put it immediately, and just because we've went through that experience. And like you said, I had a really bad experience. I bought a lot of infrastructure I probably shouldn't have at the wrong time. I got lucky on my ASIC buys, luckily, but the industry, it is so tough to find a partner that you can actually count on. And I know that when you were building this company, that is something that was near and dear to your heart. You wanted to be that person that people can trust. And that was one of the reasons I wanted to join up with you, is because that was something that I went through as well. And to find a company or a person that was willing to make that their number one priority, that's who I wanted to work with and help build out with.
I don't think people realize, it's probably worth giving a little bit of context, that many operators, when they say like, online in 45 days or online in 60 days, they're usually selling a slot like what happened to you, Joe, for a facility that hasn't been built yet. And part of you paying them is giving them the capital to actually build out that space. And I'm not going to say that it's a terrible model. Like for some people, that's just how it works. You got to have some solution to the chicken and egg problem of building a facility. Not everybody has millions of dollars in capital to go out and build a facility before people fill it. But it leads to all these issues that if you don't have your permits in place, if you don't have your build timelines set, if you thought that you could finish it, but you were missing one piece of infrastructure, like a metering cabinet or a transformer, some of these things that if you don't have it on hand and available, can take you 18 months to get them. Those are the kinds of things that keep people from ever turning their machines on, and it's horrible. It leads to people losing their shirts on investments, and it's part of why we do it the way we do, where we build ahead of people actually buying machines from us. It means that we don't collect as much money up front. It means that we can't necessarily scale as quickly, but at least the people that do work with us have an experience where they can, confidently refer us to other people and don't have to tell these nightmare stories on podcasts, hopefully.
Yep. When I was building out my site, or trying to, I mentioned Texas earlier. I was partnering with one of the most trusted groups in the industry. And it was in August of last year that they were going to start a site in Texas. They wanted me to be an investor with them and help move my infrastructure down there. And they told me 90 days from August of last year. Phone calls after Zoom meetings after, hey, come out and see the site, see where we're at. Oh, never mind, don't come out, cancel your flights. It was March of this year where I just decided, you know what? You guys aren't going to get your shit together. I can't do it. I don't really want to be in Texas. Anyways, you don't know what you're doing. You said you knew what you're doing. You didn't know what you're doing. And so that was like 6 months there that I just basically waited for other groups to do what they said they were going to do. Again, one of the most trusted groups. And it just didn't work out that way. And I followed them along. I still talk with them and stuff. It took them another 3 more months. They finally got up, which is great. But it's just, people will go in with best intentions saying that they'll be up in 90 days. And because they're front loading it with client investment to go through and build out that site, they can't predict. Their particular issue had to do with rights management with the land, and then hardware acquisition. They couldn't get the transformers that they wanted to, because if they would have bought in October 22, the investment money they had for it was appropriate to buy their infrastructure. But they waited to go buy the transformers till April, and prices had almost doubled at that point. And it was tougher for them. So yeah, us going through and building out infrastructure ahead of time is a little bit slower, but it guarantees our customers never have that experience.
Well, I think that cutting your losses is also it's an important lesson learned.
Yep.
At least in my journey, I hear you have that experience as well. Like sometimes you're almost there, right? Like I compared it to redoing our house in Amsterdam. Like the first part of the renovation went very fast, but then the last part, the last 10% took almost the same time as the first 90. And that I experienced in mining as well. And you just struggle along because you're almost there, but at a certain point, you just need to put a date. In my case, it was my wife that said, "Okay, 1st of February. It's if it didn't improve, we're cutting it." So. Having a firm date and then being able to say, okay, this is not going as I wished. Maybe I should sell my ASICs or move to another operator. That's also it's tough, but it's necessary.
This is definitely not an industry without its challenges, and I think we're all case studies of, in some ways, what not to do, and nowadays what you should do.
Yeah.
Nico, I'm curious for you. This is not necessarily an easy industry to navigate. What keeps you passionate about it?
Yeah, I don't know. I got the Bitcoin bug first of all, and I think it's provided me the opportunity to be an entrepreneur, right? I grew up in a family business. My dad has a successful business that still exists over 50 years. Uh, it's a business that I explored, but I never had that passion for, and I now found a passion for this, and uh, it allowed me to build something that I enjoy doing, but also the parameters that I was looking for. Living in Argentina, far away from the Netherlands, I want to have the flexibility to move around and go to Europe when I want to. Being able to spend a lot of time with my kids, also like having that flexibility to work when I want and where I want is something that's a big motivator also. Yeah, and I think it's just interesting, like the the overlap with energy. I learned so much about energy markets and about energy in general. Before mining, I wasn't aware of the infrastructure that I saw. Driving on the highway, you drive by a substation. Like I would never saw those substations somehow, but now all of a sudden they're everywhere. Uh, it's so many aspects about which you can learn. I think that's the interesting part.
I love that. You're a miner when your wife ends up sending you pictures of new containers going up. Joe, are they building a Bitcoin mining farm? And it just snaps there, like, oh, I saw a substation we didn't know about. Have you talked to them yet? And it's kind of cool because it does become part of your life. You start seeing these things that have existed out there for dozens of years, and all of a sudden you're attuned to them and you're following power lines. I wonder where those go. It's just a neat aspect of it from the mining perspective.
But also, like coming from the Netherlands, where there's a lack of resources, right? Like it's a small country. We don't have we have a big gas field, but we cannot extract gas from it because it causes earthquakes. So there's always been a resource limitation in the Netherlands. So it was always about efficiency and not using electricity. Using electricity is bad, And now I also got this mental shift, like, okay, it's not about electricity use itself that's bad, but maybe what you use it for and how you use it, how you build it out. Like working at the government, we pushed hard for renewables, like wind and solar, and I was like, of course, I was for renewable power, but like I know a lot of governmental officials or people that work at the government, they're not aware of the impacts on the grid. Now in the Netherlands, you see that there's the grid being stressed because of this high influx of power. Uh, Many people that build out solar panels on the roofs because they were getting paid to produce power, and now they need to pay to get rid of that power. So it's uh, it's just interesting learning all these things that I wasn't aware of, and somehow they are a big part. Like energy is a big part of your life, right? But somehow you just take it for granted, and yeah, you don't look beyond the flip or the switch of your light if you're not necessarily involved in an industry like this.
Bitcoin mining is an MBA, a finance degree, and an engineering degree all rolled into one. And it's definitely like Joe said, it's something that changes your whole way of seeing the world. The infrastructure, the energy, these things that we depend on to run our daily lives, whether we're involved in Bitcoin mining or not, go unnoticed and unappreciated by 99% of people. And just like knowing where your food comes from, it's very enlightening to be able to see how it all works at the base level.
Yeah, yeah, that's a good comparison. Yeah.
Well, whether people choose to work with Abundant Minds or they end up working with you or maybe some hybrid of both, if people are getting into Bitcoin mining, what do you hope that they take away from working with you and working in this space? What kind of impact do you hope that people get from being exposed to this?
Well, I think mining is an opportunity to create some form of independence, right? Like, yeah, that's free. There's some, uh, yeah, a way of freedom that you can obtain by mining, because you run your own business, even if you have your one miner hosted somewhere. Like, yeah, you have the feeling that you run this little mini business that produces this cash flow. So I think. Yeah, that the first time I invested in mining, that was like, to me, it made me feel really good for my family that I was creating some sort of alternative to my salary uh, to provide for my family. So yeah, um creating something that provides you freedom and cash flow. Like, I think that's a great experience.
Are there any final thoughts or words of wisdom you want to offer to people? They've been listening the whole time. How would how would you sum up or what one point would you want people to take away that they can carry into their lives?
Yeah, I think we touched upon a lot of things. So I wrote some things down, but I think we already touched upon them. So yeah, I think maybe go back a bit to early in the conversation. Just get started, and that will trigger you to learn about mining. I think that's the main message. Just like getting off zero, right? Like buying a bit of Bitcoin, they will pull you into that rabbit hole. It's the same with mining. Just get off zero hash rate, and just get started. Yeah.
I love it, man. Well, I have loved having you alongside myself and Joe on the journey. We've loved having you come and do presentations for the community as well and providing value and really hard numbers and charts that give some credence to what we've been talking about. I love what you're doing. I love reading the Bitcoin mining blog post. Where can we point people so they can find you, so they can find your work? How can they keep up with what Nico's doing and how he's changing the world of mining?
Yeah, so our website is called digitalminingsolutions.tech. There you can find our blog and can subscribe to the newsletter. And then I'm quite active on Twitter and LinkedIn. Uh, yeah, that's where I post daily insights and daily analysis. And yeah, I've been preferring LinkedIn lately because Twitter, yeah, it's hard to keep up. Like you need to post so much, and social media is not my preferred hobby, let's say. So I see that on LinkedIn I get a better reach, and there's a lot of people there that are seriously looking at mining. So, but I post on both sides. So either Twitter, LinkedIn, or give a visit to our website.
Anybody who's listening to this, subscribing to Nico's newsletter, Bitcoin Mining Blog Post, is probably the highest return on time you can get in the mining space, other than maybe listening to all the other episodes of this podcast. Nico is a wealth of information and is not just giving you his opinion or feelings. It's really down to the hard numbers and data, and that is how any intelligent investor, entrepreneur, business owner makes decisions. So check out his newsletter. Nico, really appreciate you sharing time. And Joe, thank you as well for being on here with us and
Yeah, it
keeping
was
the
fun
conversation lively.
to be with the three of us. Yeah.
Absolutely.
Thank you very much for the invite.
Thank you so much, Bo.
All right, everybody. Until next time. Peace.